Dramatic stuff yesterday. The euro was slammed on the back of Draghi's comments, but you put out a short trade recommendation on Wednesday, so how smug do you feel today? Well,
we're feeling more comfortable. We're glad he said what he did, because actually one of the stories has been, the euro's been remarkably resilient, hasn't it, to this dollar strength that we've had on the Fed, and so we were nearly relying upon Draghi yesterday to come up with something dovish. He did. We expected something dovish, and that's why we had the trade. The question is, can we extend from here? And I think maybe the market is just waiting for those non-farms you mentioned. But the grind lower to me still feels pretty relentless in euro dollar.
But your target is 124.5. Yeah. So we've got some way to go to get there. What sort of time frame are we talking about, do you think?
I think that will take a number of weeks. The kind of pace we're seeing, nearer term target around the 128.50, I think would be appropriate, just ahead of non-farms. But if you break that level, then that does open up pretty clear water to the downside thereafter.
Given what we heard from Draghi yesterday, are we looking now longer term and more fundamentally based at a structurally weaker, lower euro?
I think perhaps the easier way to answer it is we're looking at a structurally stronger dollar. But the euro, I think, is obviously going to be an echo to that. And I think Draghi's trying to do his thing of let's say don't mistake what's happening in the US for what we're trying to do in Europe, or the conditions in Europe are different, so policy will be different. And on that basis, the market's trading very much on interest rates again, a very old school, if you like.
For a while.
Yeah, it is. I would say for 5-6 years, and on that basis, I think euro will remain on the defensive.
And the same question goes for sterling. Also took a hit after the BOE statement yesterday. What's your outlook for sterling? Lower?
Bearish. I think actually today sterling's perhaps one of the most vulnerable, because it's just holding above 150 against the US dollar. So if we get non-farms 165 in line, you keep the tapering story in play, you keep the dollar on the front foot, and I think that might be enough to take cable through 150.
The worry, though, for a dollar bull like yourself is that everyone's a dollar bull. I've not met a dollar bear in what seems like months, and that's a dangerous position, isn't it?
Typically it is, and I would say that generally, to be honest, at HSBC we're always trying to be the slightly outlandish ones, looking for the outlying views. But I don't think, particularly on the dollar, that makes sense at the moment. I think sometimes the consensus is right. I suspect we are this time around. But the true art, if you like, is finding the other side of the dollar bull trade. What do you sell? And that's, I think, where we can diverge from the consensus.
And what do you sell then?
Well, you've mentioned euro, you mentioned sterling, and I think they're the principal ones, but the consensus would say you should sell the yen. We disagree, and I think that's where we've differentiated ourselves.